Focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in December 8, 2021, and the Santa Claus rally is back. Or at least that's what some people are hoping. Today was an amazing bounce. The NASDAQ closed up 3%. The Dow Jones wanted to do 2%, but about 1.5% and 2% on the S&P. It was an overall just huge day, and this is actually the biggest bounce that we have seen since March. And then you had a little bit of the volatility afterwards, and then the big April there with some of the squeeze. And there's a lot of fun facts. I'm actually going to jump to the pretty pictures here. The first one is what led the way. Apple calls on the short term has actually been one of the most popular trades on options, and Apple is what everybody is flocking to right now. But then, speaking of bounces in March and April, this is actually now too the biggest single day increase for unprofitable tech stocks, and that's pretty much some of the small caps there and a little of that small cap rally that you saw back in March and April. So today was an overall good day. There was a lot to digest, especially if you were holding some call options. Not everybody got rewarded, and we talked about it a lot today. We're going to talk about it here when we get into the plays too, but it was just an overall good day. We still have a lot on the week. There was a different set of news. There was two positive things that kind of drew everything up today. So we got our catalyst on Friday, and then we got Powell next week. So we got a lot to talk about. I'm going to go over everything that happened in the market today, the plays that we made. We actually did make a lot, and then we did take some profits. There's a couple of interesting ones on the table, and then the plays for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's been in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you're kind of surprised that Amazon doesn't run their delivery business with walkie-talkies, then yeah, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off that bat, like I said, today was a very good day, but not just in the United States. The whole entire world did good. The United Kingdom, they had about a 3% gain. Germany did good. China, Japan, literally the whole world was green. We kind of led the way yesterday, but everybody kind of took cues from that. So all across the board, it was kind of risk on, and that's why those pretty pictures that I showed you here with the small caps and all of that, some people may be kind of pointing to a FOMO rally. So there's a lot of different things happening in the market, and with all of that volatility, it is not over yet, but now we have recovered to some key levels, and now you might be asking that question, is the Santa Claus rally back? But overall, today was good, and it was led by the news there with China yesterday. Again, whole world did good. China did good. They announced the easing there, so that was kind of positive. And then you had a lot of Omicron headlines, the hospitalization stuff yesterday, and then there was a report today on the vaccine providing some protection from it. So people took everything as good. All of those fears did fade away. You saw a little bit of volatility there with the travel stocks, but once again, everything was good, and a majority of names were up on every index. And again, the NASDAQ at 3%. We really haven't seen a number like that since back in the beginning of the year with a lot of the volatility and running up that we saw with inflation. So that was very, very big. But like I'm saying, volatility is still on the table, and anything could happen. We have a couple of catalysts this week. Even today, we did hear from the whole Russia discussion with the United States. Didn't really produce any response, and a lot of people were talking about it. My estimate is that you will see something happen probably around later January if this situation was going to escalate. So nothing too crazy over there for the most part. Today was absolutely fire, and the next big key is that we have came back to the level. So I do have a prediction for the rest of the week and what I'm looking at, but even just what you saw today and to kind of understand things, there was a lot of different rebounds, a lot of different industries came back up. We did see the problem today with premiums. If you were holding options, you probably noticed that not all of your premiums were going up. Even our Apple calls, you could see they closed at 171, but early in the day when the stock was at 160, 171, our premiums were actually down. And then at the same price by close, those same premiums went up 82%. So I even took profits on some options because even though we had a 2% gap up today, I was up more on call options yesterday than today. So this was one of the weird effects, and this is where it gets interesting. But remember, I was bringing up the levels as we were declining. You got to pay attention to where we're at now. We have pretty much closed right below the level of after Thanksgiving when all of the drama started. So we are now at the top end of the range, pretty much back to normal. Remember, every single other day during volatility, we were at a lower and lower point. That was the market communicating something. And now even at this level, it's pretty much communicating Santa Claus rally is still in play, but even with the scope of the index moves being large, volatility is still creeping. The premiums are not yet sold. I thought they would have got sold today. I thought with a big gap up, we would have saw the call options go crazy, but it looks like we need a little bit more confirmation. So for the most part, we've pretty much brushed off all of the Powell comments, and now we are trading exactly as the same level as pre-Omicron. And if you kind of pull it back a little bit, we were kind of slipping ahead of that leading into the holidays. There was some issues with travel and all of that. I just remember with Airbnb. So a pretty interesting level, but now to visualize what's happened over the last few weeks, you're getting an idea of how the market's feeling and now where else it could go. But for the rest of the week, it's looking like it's going to be bullish. I mean, at the very least, I don't know if we're going to test the lows again without hearing from Powell. Again, he's going to be out of the way. So that's both good and bad. It's going to create an opportunity in my opinion, but I am thinking the rest of the week should be fairly bullish, or we're going to hold more higher levels. And then especially for tomorrow, I think it's going to be a lot more active than Thursday. We might take a chill pill on Thursday, and then Friday, I think it's going to be a wild card with the CPI, and depending on what happens there, people are going to start positioning for the Fed and Powell. But coming into the company news and events, the first one here with the SALT negotiations, they actually took hold of Congress here. Even though we did get some positive debt ceiling news from McConnell today, they said that they had that figured out, but right now, they are still debating SALT. Pretty much Bernie Sanders does not want the benefits to go to the 1%. Anybody making more than $400,000-$500,000 a year, he wants that to be the cutoff for SALT. And then Menendez, somebody else there, I think he's another Democrat, but they are fighting for a $1 million cap. So SALT's a big deal, could affect a lot of different stocks. We've even talked about it, even with the tax plan and even Wall Street. I think it's going to be very, very important. So keep your eye out for that. We will see how the debt ceiling stuff goes. Until it is figured, it is still a wild card, but things are looking good. So that was key. And then Biden's watchdog pick, Omarova, you guys remember her, very controversial. She wanted to literally end banks and make the Fed be in control of all credit and a lot of other things, but she has withdrew her nomination after several congressional oppositions to her nomination. So she is backed out and she will no longer be the pick. So pretty interesting to see. And then Apple, like we said, the call options have been dominated by it, and it is actually one of the most popular, or the most popular play in the stock market right now. Everybody is rushing to it. And then Gunlock, the bond king, he's been having this little conference and meeting. He kind of does it every couple months here, but he said there's rough waters for markets as the Fed pursues a taper, and he says he would not be surprised to see a 7% print on inflation coming here on Friday. So pretty interesting, but it seems like the bond market is already getting it set up, and I mean, yeah, we already know what to expect. It's going to be crazy. And then finally, Amazon package hell, AWS has caused a bunch of problems for them. If you haven't noticed, since like 10 a.m. Eastern today, AWS has been experiencing a ton of problems, a lot of different services, even like your Ring camera probably didn't work, but it also affected Disney, Netflix, Coinbase. I think Netflix's traffic dropped 26% because of it. So a pretty big issue. Amazon said that they figured out the issue. They're working on it. Nobody really said the cause of it, but that had some effect. If we see that carry on through the week, I think it will be key, but for now, doesn't seem like a cause of a concern just yet. But this week is still going to be exciting. We got a lot on the table. A lot of different things can happen, and just understand this is the pregame setting up for Powell next week, so I hope you're ready. But that is pretty much it. So let us get into the plays. So, right off the bat, I got 3 different stocks that I'm looking at coming into tomorrow. I have plays on 2 of them. One of them I don't have, but I will be watching this week. That one is Pfizer, but the first one is going to be Chewy. And why I like this one, it is a pre-earnings run-up play. So, surprisingly, even though a lot of the big dogs have already reported, there's still a couple of those names out there that we've been seeing, and we did it yesterday with Lulu and Costco. Both of those plays ended up working out. I'm still holding the Costco, but this morning the Lulus were up about like 40%. Sold those, took profits on that one. That's the whole idea with this play. We just want the pre-earnings run up, and if anything, this contract actually moved a lot compared to some other ones, so that one was good. The Costco, it was up 30%, then it closed up around 12, but I think they were holding up a little bit better. Remember, we said Lulu yesterday, the premiums were already so low. That's why I think I was able to capture such a big gain so quickly. But now that's the same logic here with the Chewies. I grabbed 5 of the December 71 calls for $1.45. The idea is sell out before earnings, but if you remember Chewy, I did make this play earlier. Remember, there was some activity on it last week and they were going up, and I figured, okay, I could make a play. We're going to have the pre-earnings run up. Well, that play's down 70%. It's January, further out the money. So after what we learned today, I decided to go with the short-term contracts, and what we learned is that a lot of the premiums didn't move much. Again, those Microsoft, I only made 10%. I was pretty close to the money. These were expensive contracts. They had a lot of time, but I only made 10%. And some of the other calls, it's like, wait, they didn't really go up that much. The real winner on the contracts today, it was pretty much any of the December contracts, any of the short terms. That's where the volatility was really concentrated. So if you even come down to like the March or April Amazons, these are the plays I wanted to be able to hold. But you can see like 18%, even I think on some of the ones closer, like 20% is what you got. But then if you come to the short terms, you'll see here, I think pretty much all of them shot up like 80, 90%. These are up like 138%. So the short terms got more rewarded if you took more risk on there. That's kind of been the little anomaly for this week. Last week, the ones with more time did do a little bit better. So keep that in mind. And now with learning that, I decided to do the average down, getting the pre-earnings run up on Chewy. And that's why I went with the December's. Going to be a lot more risky there, but we do have the earnings. So I think that'll be a little bit better, but that is the idea and the reasoning why I took the risk. But that's the first play. The second one, Pfizer, like I said, I don't have a play with it, but there was a lot of that virus news, and they started moving there on the news that the vaccine was somewhat effective against the virus. So all of the vaccine stocks started to move. Pfizer is very, very interesting. I like that one. We've talked about it, and remember, over the weeks, we were eyeing it. We got the Merck first, and that one was a dud, but if you really saw Pfizer, I mean, they held up very, very well, and now the same dilemma is going to take place whether or not you get the short term or the long term. But I think they're kind of at like a heaven or hell moment on some of these contracts. You could see pretty much here was the first run up. I thought they were expensive, then it kind of came back down. I said no, then it just kept shooting up, and then they just kept going. So now you're coming back to the pre-volatility levels at some point, but this has been almost a month of decay. So that's where I'm saying it's either going to be able to have a bounce from here, or it might fade away. Or sometimes if you get this heaven or hell moment where the contract far out the money, it's like you could see it could hold, but it won't. We might get a little bit of a bounce, and then it might start fading away. Again, if the volatility slows down or some of these stocks don't move the same pace, if it's out of the money, remember, it's pricing something in, so they could slowly decay. But I think a lot of the Pfizers are at good levels. I'm going to be watching that. It really just depends if they get that momentum. Again, they've all sold off a lot, Myrna, Vax, all of that. It's been a very, very volatile play, so I'm keeping that in mind, but I like it. And then finally, Apple, baby. It's the most traded option for a reason, I think, and they're actually willing to move. Again, what the premiums did today was a little bit slow, but for the most part, that premium is held for a long time. So just think about when we got those apples. We've been holding it for quite some time. I guess we got it at the beginning of the month or at the end of November. So the fact that these are still holding up, they're a little bit out of the money, it's a good sign. But with a lot of people piling into it, I'm starting to like it, and I think they might just be the year-end winner, if anything, even no matter what happens. If there's just a lot of options, people are liking it. If it can withstand anything over the next week or two, hold these levels, I mean, they already have some good cushion. I think it is going to be the winner, and I think people are loving it. So at the very least, I'm probably just going to be looking to trade it, and then even Amazon as like a more expensive option, but keep those in mind. As far as everything else, I did make a couple of other plays. Like we said, we sold out of the Lulu, and then let's organize this by time. I grabbed the Intel in the morning. Man, I'm getting smashed on Intel both ways. I went for the calls this morning. The news of them with the Mobileye selling that off for like, they valued it at like $50 billion. I think gets very good news. These out-of-the-money contracts held for a little bit. Remember, we got that put yesterday to hedge any of the chip makers. Those dropped 67%. I was going to sell them today, but I said at this point, $100 left. I'll just write them out. But I did grab calls with more time. They ended up dropping 18%. Kept this one small, $300, so I got to play $600 both ways, and now down about 50% of that so far. But with how the chip makers are moving, all of that, I think one of these is probably going to come back, especially with how Intel's moving. We will see with the volatility. But that was the first play, and then I grabbed Marqeta. These ended up closing. They kind of held down 16% there. The spread is kind of wide, but I grabbed two of these at $234, about $460. They had news in the morning, and I think an upgrade, but the news was them expanding into 13 different continents, so that was good for them. They held up, and there was just an overall bounce in software. Those were the ones that had the biggest dip, so I was hoping there'd be a little bit more value there. Went for those June 22nd, so a lot of time on there for $400, so we'll see how that one plays out. Then we sold the Lulu for a profit. Then the Boeings, these ones were up like 10 or 12%. And the fact that I was up more on them yesterday, decided to take a very, very small profit on that one, closed out of them. I didn't like how they were moving. Again, my logic was, I mean, if we did get any volatility, what would happen if the calls are barely holding? I will not be opposed to double dipping, but I just wanted to get out of those. And then same thing even with the IBM. These ones were up about like 30, 40%, so I thought that was good. Took the profits on there. And we still got a couple of other plays that we're holding. And then I closed out the day with the Chewies, and then I grabbed two SPY puts for January 460, and they were $9.11 a pop, so they cost a little bit more money. But the reason why I got this is kind of a place marker. I want to see. It's kind of like the Pfizer contracts where it's really at a heaven or hell moment. And I think 460 is going to be a pretty big key. I don't know if it'll get there right away, but what I want to see is how the contracts move in the relative effect. Pretty much, I think it's going to fluctuate somewhat around this price. I mean, they went up after we got it, and then that little sell-off, they dropped, but it's pretty much, I think it's going to hold the floor here. And this is just what I'm saying, is that at this price of like the low $9, you're pretty much buying now any of these puts with 45 days of time, 3 times or 2 times cheaper than what they were just going for. So it's like we know what's going on, kind of in the whole logic. If the house is on fire, we could still buy insurance. So it looks like the fire's under control, and that's where I'm saying I think this premium level for it might be very interesting. So I want to be monitoring it, and I'm willing to get some exposure because I'm still holding a lot of other calls. We got those Apples, we got the Microsoft plays as well, and just the amount of time with that, I think this one will just provide a decent hedge, kind of like the Tesla did, where I should have sold that one, and that play went down today. I'm down 30% on that, but then some of the other calls that I'm holding, I think there's the Airbnbs. These ended up dropping today. They were holding break even, but that one's a big position, and that's one of those that could kind of come to life there. So keeping my eye out for all of those, but those are the main plays. As far as everything else, gonna be watching Apple. Keep my eye on Boeing, like I said, for the double dip. The pre-earnings play, I'm really liking Costco. I decided to hold it. Premiums were up more, but this just looks a lot better coming into earnings 2 days away with this market. So I think they'll have more of a chance to run. They ran a lot today, but then they kind of tempered out the Lulu. I think we just caught the bottom very well plus this. That's why I was like, all right, just give me my money and we're out of there. But watch them. Again, Chewy for the pre-earnings. Held up a little bit good even into the close, so I like that, but we'll see how that plays out. If we get a good gain, we'll flip it. Then NVIDIA and Intel. But NVIDIA, I mean, if this continues, I mean, it was a fan favorite. I mean, if it does start to break above here, that will be very good. Just don't forget what it was coming off of. I mean, the other day was pretty scary, but this bounce today was epic, so they're definitely going to be in play. OMA, they were supposed to have the catalyst today or tomorrow, but I think tomorrow you'll hear from them. They did move up a little bit. The conference did already start, but the plays went up and then down. They're pretty much all over the place. I mean, we'll see with any volatility tomorrow. Then Microsoft still holding those plays. They went up a little bit. I do think this has the potential to be Apple-like, but we will see. The premiums have not moved yet, but if Apple does go crazy, I mean, I wouldn't doubt it to see some sort of effect like that. So watch them. And then Stitch Fix, they got clapped 15% after hours. Watch them for a post-earnings continuation tomorrow. Dare Bioscience, they got an FDA approval for vaginosis, but that was good. They're up 50%. So we saw the news. It got halted throughout the day. I don't know if I'll play it again. They've been around for a while, and I think they did a reverse split, so be a little cautious there, but it might be a nice, fun biotech trade there. And then finally, TLT and the dollar, baby. It's finally chilled out. and no question about it. Notice we are back in that range that we were talking about for months, and then sure enough, this SPY is just right back to that level again, above where all of the drops started. So the bonds are telling us a lot. Again, it's starting to play out that pattern that I said we saw in the beginning of the year, where you get that run up and it kind of starts to hold here. It looks like that might play out. Again, we have Powell next week. I'm waiting for that to be the move. The dollar may chill out with everybody else chilling out as well too, but we're going to keep an eye out for that. But very simple, just all you got to do is wait for Powell. There's going to be a move in the meantime. I don't think we're going to go any lower, but anything that happens towards Powell, depending on what he says, it is either going to be a front run or it's going to create a nice divergence. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, baby. Keep going. Don't get distracted. But the cult loves you. I love you. I will see you in the morning. Let's go.